Okay, Femi, are you still with me?
Yeah.
Sorry, I don't know why it stopped.
Yeah, I was gonna ask,
Okay.
like, so basically the for example, let's say a red candle on a daily chart.
Yeah,
Is that like something like the general trend for the whole day or like the
exactly.
average?
The general trend for the whole day. But
Basically for the whole day, like the
yeah,
market was going.
was going down for the whole day. Well, we have different sizes of candles. So let's say let's take this. You can see this very candle.
Yeah.
That means the market it's opened from this point and
Mm-hmm.
fell for the whole day. I mean, this is a very long fall.
Okay.
But take looking for a very small rectangle. Okay, take this guy. Oh no, let's look for something smaller. Okay, take this guy. Can you see this guy?
Mm-hmm.
You can see it's just more like a plus sign.
Mm-hmm.
The market fell just a little. It's opened at that point and closed almost at that point. So
Mm-hmm.
for the whole day, the market was ranging, although
Okay.
it's closed below its opening point, just a little below its opening point.
Okay.
Yeah, so that's the concept. Let's go back to our drawing. Any other question?
No, not right now. Thanks.
Are we good with this?
Yeah.
Okay, so let's continue. So what we just did is the candlestick anatomy. We have the candlestick patterns, which is an integral part of this course because it tells you the entry points. And like I told you, the entry point is very, very, very important. Like very, very important. So we'll be looking at the types of candles we have now. Let me just do this. Are you still with me?
I'm here.
Okay. So the first candle we're looking at is the bullish engulfing candle. Bullish engulfing candle. Bullish engulfing. Okay. This is how the bullish engulfing works. So I hope I'm not too slow.
Nice one.
Okay. There are PDFs for this, but I just want you to understand this part
Yeah.
very, very well. I could have just gotten a picture and explained using that, but I want you to understand very well. Excuse me.
Yeah.
Okay. Okay. The bullish engulfing candle. Just like engulfing, it wraps up the former bearish candle completely. It's wraps up the former candle completely. For this is the bearish. It opened here, it closed here, it formed wicks, hard tails. But this bullish candle came, it fell below the point. It can start from here, but anyway, it fell below the wick, the lowest wick, that is the lowest point, and closed above. You get?
Okay.
So this is just a simple term. This is just the simple term. Bullish engulfing. It engulfs the previous bearish candle completely. It engulfs the previous candle completely. So I want to look for a bullish engulfing here. Bullish engulfing. It's not hard to see. I can see so many already. Let's see. Bullish engulfing. Okay. Let's zoom into this. You can see this guy. This very one. Are you sleepy?
No, I was just writing, man.
This is the last bearish candle, and then this green candle popped up, the bullish candle, and it wrapped the red candle completely. You get?
Yeah.
And after the engulfing, another green candle came up, and you can see how the market went up. So a bullish engulfing candle after a series of red candles symbolizes a rise in market. Okay.
So bullish engulfing candles after series
After
of
a series of bearish, not necessarily series, but after a bearish candle symbolizes a rise in market. I have a PDF for all of this. I'm just trying to explain. I can always send the PDF to you. So you can study more of that. But it symbolizes a rise in market. So for those who scalp, have I told you the types of traders we have?
types of traders?
Yeah.
No, I'm
Okay.
not sure. No, I don't think.
We have the scalpers. That's those who just come into the trade for maybe 1, 2, 3, 15 minutes, and they are done for the day. So these guys trade with a very high lot size.
Okay.
Let's say ideally a trade you're meant to hold for maybe hours or a few days. It's probably 0.2 lot size. The scalpers can come in with 10 lot size. You get?
Okay.
So the scalper is just interested. Let's assume this to be a 1 minute candle. The scalper is just interested to get a few pips, maybe 2, 3, or 4 candles, and he's out of the market. So when the scalper sees this engulfing candle, the point it closes, he's just interested in getting maybe a few more candles. Let's take this to be a 1 minute candle. Let's say I'm a scalper now. I would enter after the close of this engulfing candle. Let's say I buy here. I might probably still hold, find the market fell up to this level, but he still hasn't gotten what he wants. Then the moment it breaks above this point, this might just be his take profit. Let's take this to be a 1 minute candle. So his scalper is just interested in getting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles, and is out of the market for the whole day. So he trades with a very high lot size, a very high lot size. So you can choose whichever type of trader you want to be. Then we have the intraday traders. That's those who trades. Okay, we have the short time. Generally, we have the short time traders and the long time traders. The short time traders are those who trade from 4 hours downwards.
Mhm.
Then the long time traders are those who trade from 1 day or above 4 hours and less than, let's say, less than a week, or from above 4 hours down to 1 week, or series or weeks, but less than a month. But then we have the position traders. These are guys that hold trades for years,
Yeah.
just like Warren Buffett. They hold trades for years. So when they do the analysis and they pick their trade, they come back maybe in the next 2, 3, 4, or even 5 years.
So like they do like a limit, like a buy or sell limit.
Not necessarily a limit. Let's say I've done, let's take this to be a monthly, okay, let's take this to be a yearly candle.
Okay.
Let's say I did the analysis for this candle and I saw this as a resistance point. Okay, let me draw an arrow. Let me draw a line here. This point. You can see this point, it tested this level here. Are you with me?
Mm-hmm.
It tested this level here. It fell down, it tested the level here again. It came, it tried getting to this point, but it didn't. It tried here, it tried here, it tried here. Then eventually it broke this point upwards. Then a retracement downwards. I told you that anytime you see a break in the structure, you should wait for a retracement. Most likely, a retracement is meant to happen. But if it does, sometimes it does not. But the surest trade is a break in structure and a retracement or a pullback. Then you buy or you sell, whichever. So now it's retraced, it's pulled back down to this line. Then let's say I'm a position trader, a long-term trader, a position trader now, and these are yearly candles. So I would have been watching this trade maybe for 2, 3, 4, 5 years. And the moment it breaks this point, let's say this is 2015, 2016, and in 2017 it fell back to the point, then I would be suspecting something. Let's say I buy from this point. Then now I'm interested in holding the trade for another 5 years. Okay, let's say these guys are bought Bitcoin in like 2011 and sold in 2020. Those are position traders. They necessarily do not, their participation in the market is not really active. They just hold the trade for a very long time. They do not have to come every week to check, to do this and that, but they can hold their trades. Why they are different from those who hold Bitcoin is that they can come, set stop loss, set to take profits, adjust their stop loss and take profits. In fact, they can get cut out of the market if it reverses back to their stop loss. You get? Yeah. So it retraces back to this level. Then I'm going to buy and hold for another 4 or 5 years, and boom, that will be the gain. So these guys do not trade with little capital, not $1,000, not $2,000. They trade with millions of dollars. Yeah. Yeah. So that is that. I think we'll still have to take an aspect of that beginner's class just to refresh you, or probably I should just give you the PDF. It's not something really much, so you just get the concept of market back.
Gotcha.
Yeah. So do you understand engulfing candles now?
Yeah.
Okay. Like this is not an engulfing candle. This very green candle here is not an engulfing candle. But this green candle here is an engulfing candle. This guy 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 is not an engulfing candle. But this candle, this pattern this pattern, I would still explain that one to you. It's a pattern.
So just confirming, yeah, engulfing. Oh, okay. Basically, you said it before. I wrote it down. So engulfing candle is only when like the bullish engulfs the bearish.
Yeah, the bullish engulfs the bearish. For a bullish engulfing candle, we also have the bearish engulfing, which is just the direct opposite.
Okay.
Yeah. So this is a bullish candle. This is a bullish candle. This is not a bullish. This is a bullish.
Okay.
Yeah. So back to our drawing. So now for the bearish is just the direct opposite of this. This guy now can be my blue. Right. Sorry, can you still see my screen? No.
No.
Okay. Okay. Can you see it now?
Mm-hmm.
So this now can be my blue. Now this is my red. This is my red. This is my red. So this is for bearish engulfing. Bearish engulfing. Are we good?
Yeah.
This is just the direct opposite. So let's check for a bearish engulfing. This here is a bearish engulfing.
Mm-hmm.
And you can see what happened after the market fell.
Okay.
Hmm. Mm. This is another bearish engulfing. This is another bearish engulfing.
Okay.
This is another bearish engulfing.
Mm.
This is not a bearish engulfing, although this set of candles are a pattern. I'll show you later. This is a bearish engulfing. This is not really a bearish engulfing, although it looks like it because it's way above the wick.
Mm.
And the wick is way above each other. This is a bearish engulfing.
Well, it's not really that bigger than it though. It's not about the size.
Wait, this very one, or which?
Oh no,
This one,
that one.
this.
Yeah.
You can see the wick started from here
Mm-hmm.
and closed here, so it's still wrapping it kind of.
Oh, so it's also about the wick, yeah.
Yeah. Although it's best when it's about the body.
Okay.
It's sure a sense about the body.
I gotcha.
Yeah. Let's see. Okay. But you get the concept of engulfing candles now?
Yeah.
So we'll be checking our next candle now. We have series of candlestick patterns in markets. But I might not really be explaining everything here in the call because it will take time. I would explain the ones that are common, that are repeated. Although I'll send you the PDF that contains everything. I'll send you the PDF that contains everything. I would send you two different PDFs. One contains 7 types of pattern that are noticed to be repeated in market. And one contains a series of patterns. So now we're talking about the doji. The doji. You know, they are Japanese candles, so they have different types of names, phone names.
Okay.
The doji can be very funny. It looks something like this. The doji looks very tiny. Yeah, the doji looks something like this. It can have a week up. It can look like a plus sign, like I was explaining the other time.
Okay.
It can look like this. So this is telling you something in market, and this was what the Japanese trader understood, that he was more successful than others. So this closes at the point where it opens.
Mm.
You get.
Yeah.
So it tells us that the market opens and closes at the same point.
Okay.
And this represents indecision between buyers and sellers.
One second. It's okay. How do you spell doji?
Doji, D-O-J-I.
Okay.
Very good.
Mm-hmm.
Okay. So this represents indecision between buyers. Let's say you have a series of uptrends and suddenly doji pops up. So now you do not know who has the strength, whether the bear guys or the bullish guys. It shows indecision. The power has not been given to any yet, but it's most likely for a reversal to happen at that point. You have series of bearish candles, maybe 4, 5, 6, or even 10, and suddenly a doji pops up. So this is telling me that okay, the bullish guys are trying to bring the market down. You know, when you have the bearish candle, it's telling you that the bullish guys are active. They have more power now. They are buying at that moment. That's what it means. The buying is more than the selling. That is a demand point. When you have a demand, the market rises. Then when you have a supply, the market falls, just like the literal term. So we're not just doing magic here, it's still from economics. Although I did not study economics, so I might not be able to say much about that.
Mm.
But when you have a demand, the market goes up. When there's a demand for a commodity, you know, on that forex we trade a series of things: gold, sugar, crude oil, petroleum, name it, cocoa, and the likes. So when you have a demand in the market, these charts are not just gotten from any random point or something. The moment you as a trader buys sugar, for instance, it affects the market.
Okay.
Let's say I'm an importer or I export cocoa, for instance. The moment I sell my cocoa, it tells on the market.
Mm.
For me to sell, someone at the other end must be buying.
Okay.
Yeah. So when you have a doji, it's now like a balance in between buyers and sellers. So the rate of buying is now like the rate of selling. So we do not know who is actually taking control of the market. You get my point?
Mhm.
Yeah. So you are in a zone where you do not know who is more powerful. Let's try to look for a doji. So doji is
Go in like 15 minutes.
okay. Yeah, sure. 15 minutes. I should expect you like 45. That'll be what time day?
Yeah, 2:45.
Okay. Okay. This guy here is not a doji. Not I can't really call him a doji, but it has a name. This is a hanging man. I'll explain hanging man later. This is a doji, which really did not show much here. This is a doji here. Market fell for one day, a doji popped up and maybe rose for some time. This is a doji. The market was falling, a doji popped up. It fell, but it still went back up.
Mm.
You can see this guy, this market is kind of ranging here, and it's from the doji, so it's still in a ranging market. We'll see more of this later, and why they are useful at entry points. So when you just see them, when you see them randomly in your charts, it might not really count, but at some entry points, it will count. It will count. Let's say you have an uptrend now and the market is retracing at some point. So when you say a doji, it tells you something. Look at this guy here. Market was falling, the doji pops up and it started rising. And it rose for 4 days, 5 days. You get
Okay.
so a doji here, the market rose. It was falling, the doji popped up, and market started rising. Let me just look for one more and call it a class. Okay, look at this. The market was falling for 3 days straight.
Mm.
Then the doji came up and indecision, and the buyers took over for days. So you
So
get
does it, so basically, don't you always like indicate like
a change in
something's about,
trend. Yeah.
huh?
Yes, a change in trend.
Okay.
Indecision, then most likely the trend will change. That is when you are at a point where it should trade, it should change. You don't just trade it randomly. You combine, you look out for other parameters.
Okay.
You get at this point, I think the market was in a downtrend, and okay, this was our channel. You might not really see it clearly here because the line is no more here. This was our channel, if you can remember from this line. So here was like a low point in the channel. So when you see the doji coming up, you should understand that okay, this guy is about to rise, then and it rose for days. You get?
Okay.
Yeah. So any question?
No, not really. No.
Okay, I would send you the link. I've sent link for the other classes. I hope you saw them.
Yeah, that's all. That's all.
So
Just looking at this one second.